Hey guys, Dave Keller here with Market Misbehavior. I love to ask interviewees what their one chart would be. And that is, if you had one chart, just one chart, besides a regular chart of the S&P 500 as a way to understand the broad market environment, what would it be right now and why? So here is my one chart for today. Okay, so today's one chart is the S&P 500 with volume. Now, this is a bit of a cheat because usually when I talk about the one chart, it's what's one chart besides the S&P 500 that gives you a good read on the overall market environment and why. And so I'm cheating a little bit by having my chart be the S&P 500, but I wanted to focus 100% on the volume here at the bottom. See, a lot of people have talked about the market rally. This is looking at the last 5 years here. The fact that the market's been rallying on lighter volume and how suspect is this uptrend as it's matured, as it's continued to go higher and higher, the volume trend overall has been weaker. So does that suggest an absence of buying pressure, a lack of demand, and so there's limited upside? So the answer, of course, is yes and no. The thing with volume is people, anecdotally, when buyers are looking to accumulate positions in a stock, they, sort of tend to accumulate over time. You don't just magically buy 100% of your position. You start nibbling it over time as the market increases, as the price increases, as your bets start to work, you accumulate more and more. And that's why Ralph Acampora, one of my mentors, always said that the market takes the escalator up and the elevator down, meaning, you slowly kind of go up, but then, when you get to the point where you're nervous or anxious or fearful or desperate and you really want to exit your positions, usually don't slowly, gently start sprinkling sell orders. You tend to close it all out and sell and take your money and run. And so in general, uptrends tend to be longer and more sustained, whereas pullbacks tend to, on average, be more sudden and more severe. And you can see that just looking at a chart of the spiders for the last 5 years. You can see accumulation periods and the distribution periods in general tend to be a little more severe, a little shorter time frame. So if you look at the volume picture, if you focus here at the bottom, I'm looking at the daily volume. That's the gray bars in the background. And then this blue line shows you the 50-day average volume. And it's just a simplistic average to show you the overall trend in the volume. You can see over time some big spikes in volume. And if you look up on the price chart, you can see that those tend to coincide with big sell-offs, really, right? And as I mentioned, I think the reason is because of what I described. Accumulation tends to happen over time, but the big volume, you don't see huge influx of buying pressure. It tends to be selling pressure that causes all the volume, right? As large numbers of investors want to take profits or exit positions very, very quickly. So the big volume spikes and the time when the average volume goes up is right after market tops, when the market's coming down and you have the sell-off phase, and that's when you see the big spikes in volume. So in general, if you look, the trend tends to be more strong volume bars during the downtrends, but then once the trend starts to revert higher, like you see here in mid 2018, like you see here in mid 2019, and as you've seen over the last 6 months, here in 2020, is after the big sell-off period and when the market uptrend resumes, you can see the volume overall trends downward. And that's because of what we described. People are accumulating over time. There's no huge influx of buying pressure and buying power. And so in general, the trend tends to be downward. So the fact that the volume is trending downward overall during this phase of a bull trend, what I would describe more of the mature phase of a bullish cycle, I would say that's totally normal. And if you look back over time, so 2017, late 2000, mid 2018, late 2019, this is sort of the pattern that we've seen over time. So that's not unrealistic. What is unusual is the fact that the volume in 2020 around February to March was so significant going into the lows, some of the highest volume days we've seen on the spiders going back 5+ years. And so as a result, that 50-day average is kind of skewed very high. Everything seems skewed to the upside. And so the average is still relatively high. But right now I've highlighted sort of the most recent volume read from this week. And if you look back, we're literally at the lowest levels of volume we've seen in the spiders going back for the last 5 years. So is there something to that thought that, the volume is so light
that the uptrend is suspect. So two things I would answer to that, and both of them are no. Number one, if you look back at when we've been in a similar lighter volume period, for example, here in October of 2017, in August of 2018, in July of 2019, with the exception of July, where you saw a bit of a pullback. But if you look again there in October, in December of 2019, and the other ones in 2017 and 2018, all the other times, the market actually continued higher much further after that point. You actually did see an uptick in volume in a number of those cases. So just the fact that the volume is relatively light relative to where it's been does not mean we are at the top. It's sort of one of those anecdotal bullet points. I think of it as more as an illustration of sentiment, similar to if you see very, very bullish magazine covers. Doesn't tell me to be selling immediately. It just tells me that the conditions are ripe for a market top, and that's kind of what we're seeing here. But the market, if you look back over time, has gone up 2 to 6 months after that sort of reading, and so that's I think what we're seeing here. The second observation I would have is just think about all the headwinds that could or should arguably be pushing stock prices downwards. People are ignoring it. Remember, the stock prices or the stock market is a discounting mechanism, and it's all built on expectations of where investors see the economy going and where they see conditions in the future, and it's all about what's priced in there, what expectations. The expectations with the S&P going to new closing highs in recent weeks is that things are recovering fine, that economic downturn is going to be limited, and that overall we're going to be just fine. Maybe the Fed is able to support stock prices from going meaningfully down from here. Whether or not you agree with any of those statements I just made, that the fact that the S&P is at all-time high says that the market is discounting that sort of thing. That's what's priced in. And so the lighter volume, I think, reflects the fact that it is not a bunch of new buying power coming in. It's not a huge influx of demand. It's just limited supply, and there's no real headwinds that are perceived going forward. So lighter volume with the market going to new highs sort of fits into the anecdotal playbook of the conditions ripe for a market top. However, the reason for showing this chart is, number one, to give you a historical reference that actually is pretty normal for this phase in the bull cycle. It could mean that a bull market top is impending, but it does not necessarily mean it's today or tomorrow. It could be months down the road, and this would fit into a historical perspective pretty well. And then finally, it's a reminder to I think of volume, I bucket that in a group of indicators and techniques that I call confirmation. Number one is price. The main thing to look at is price. And as the S&P continues to make higher highs and higher lows, by definition, the uptrend is in place and the market's going higher. And in general, I would want to lean into the market during those conditions. If and when the market turns lower, that's when I would be concerned. So things like lighter volume tell me to start looking for signs of a trend reversal, but at this point, certainly not seeing it. From everyone here at Market Misbehavior, thanks so much. Have a great day.